Hi, welcome to Let's Talk Bonds, a weekly podcast from INR Bonds. I'm Arjun Patsati. And today, this week, I'm going to talk to you about finding safety in the right bond when there is no safety in the market. Investors are flummoxed, as in they're really wondering where to invest because every asset class is becoming volatile. Equities are clearly sharply down. Uh, the bond prices are falling sharply, especially in the high safety bonds like government bonds and AAA bonds and ETFs. The cryptos are down, commodities are turning volatile, currencies are volatile. So everywhere investors go, they find that there is no there is no safety anywhere. So where do they actually put their money in? If to protect the capital as well as earn interest returns that can at least keep pace with inflation. Now, this week we saw the Federal Reserve hiking interest rates and admitting that they failed to forecast inflation correctly. And clearly, I think this is true with all the central banks, and markets are slowly losing the credibility with the central banks because they have been printing so much of money for every event that has been happening over the last 14, 15 years that markets are now finding that central banks have just resorted to one tool, and this is clearly now leading to inflation that is becoming a very big problem globally. And this is what is turning investors highly risk averse. Every asset class is being sold off, right from equities to bonds to currencies and cryptos. Uh, so, in this podcast, I'll take you through where you can find safety in the right bond. So at the end of the podcast, hopefully you will come to identify a good investment opportunity in the current market conditions, help you preserve capital, earn good returns, and also help you reinvest when the markets are stabilized and looking to trend higher uh, later. In a later, it's not going to happen very soon at this point of time. For that, download our app, Quick Invest by INR Bonds, for the best bonds, curated bonds for investments in this current volatility through most information and highly transparency with our own proprietary risk model and the straight through in-app investment process, the most seamless investment that you can get.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Coming back to the podcast, with the Federal Reserve admitting inflation is way beyond where they expected, and they were claiming it's transitory despite all that money printing. Clearly, markets are really worried, and investors are also worried because they have lost money everywhere. And there's been too much of excess in the last couple of years, clearly, because of so much of money central banks have printed. And with the interest rates at record lows, uh, it was like a free for all kind of a party and looked like it's not going to end till it ended with inflation. And clearly, it does show that there is always a repercussion to everything, every action that a central bank does. And if they believe that this is not going to happen, then the markets, the economy, and the inflation and the markets will tell them. So in this market, where to invest? Fixed income, if you have it, yields have gone up very sharply. So in India, the 10-year GSEC yield has gone to 7.60% levels, and a 5-year GSEC is at over 7.3% levels. So clearly, any other corporate bond over these levels will be trading at over these levels. So 3-year GSEC is closer to 7%. So you have corporate bonds also trading at 3-year 2 3 year well over 7%, 10-year corporate bonds uh, trending to over 8%. Then these are the high safety bonds. The lower yielding bonds are also seeing a rise in yields, but typically in such kind of markets, the given that the lower rated bonds where the higher yields, they're not as liquid as the government bonds and the AAA bonds. The levels may really do not reflect the kind of uh, uh, worry in the market at this point of time, and investors have to be extremely careful where to invest in. So where do you invest? Where does one invest if one has money which is earning nothing and inflation is running so high, right? Over 7% inflation currently. And if returns are much lower than that, then clearly investors do have to find some place to park the money and earn enough returns and also preserve their capital. So this you have to find the right bond to invest in, and there are many bonds that have lower maturity, that is maybe 1 to 2 year bonds that are earning something like eight and a half, between 8.5 to 9.5 or 8%, or even higher for some bonds. And such bonds, if investors are able to identify the risk in these bonds and are able to factor that the risk return profile is pretty much okay, then these are ideal bonds to invest in, because one is the returns are uh, pretty okay. The second is the maturity is also very short, so they get the money back very short and in a short period of time. These bonds can also be more liquid than longer term bonds because of the short maturity, and the other investors could always look to buy these bonds when one investor sells. So these bonds can be highly attractive for investments of investors looking to park their money for a year or maximum. So hence these bonds provide the safety and the returns that investors require. Now, looking at the markets here, where are these bonds? So typically, if you look at bonds rated in a AA to a kind of a level rating, uh, these in the NBFC or microfinance space promoted by good promoters, then such bonds can are providing good returns, low maturity, and the right amount of safety as well. Hence, uh, investors can definitely look to invest in such bonds. So we have curated such bonds, obviously, and many other platforms do carry such bonds if investors are able to identify them and identify the risk in these bonds. But again, investors need to be, or financial advisors need to be extremely careful on what kind of bonds they are investing in, because there are many bonds that are have low maturity and higher yield, but some are of much higher risk than others, even if they are rated better. So this is something investors need to be extremely careful of. Download our app Quick Invest by INR Bonds to see the best bonds available. Or if you want to see a whole variety of bonds, you can go to our inrbonds.com and go to Market Watch, where we have listed well over 100 bonds for you to take a look at what's available and at what yields and prices, and what's you can even sell bonds through our Market Watch platform. Thank you very much for listening in. Do not forget to follow us on all the podcast channels. And let us know your comments. If you have any questions which we want to address, I'll always address it next in my next podcast. You can send us a message and with your name and mobile number, and we will respond to your questions. Thank you very much.